Today I'm going to analyze a very interesting stock that's down over 35% in just one day, and many of you even went to their stores. Many of you are familiar with the company, and this is Advanced Auto Parts. You could buy auto parts from there, anything for your car. It's kind of like AutoZone and O'Reilly's here in the United States. AAP down 35% on earnings. It's been a horrible stock. It performed very, very badly. It topped out somewhere around the $241 range in 2022, and now it's sitting at $72 per share. And I actually did buy the stock when it dipped in October or November, somewhere around the $146 per share, and then I sold it somewhere around pretty much break even already, 1% loss. But thankful enough I sold it because it's down over 50% since I ended up buying it. So I'm pretty familiar with the company. I'm gonna discuss the financials today, discuss what happened with the company, and if it's a good turnaround play, if it's a good buying opportunity after it fell 35%, or is it still some type of a value trap and it's something we should actually avoid. And Advanced Auto Parts pretty much reported disaster type of earnings. The company's EPS per share came at 72 cents per share instead of $2.57. This is, just massive miss. If you look at the company's outlook, their outlook now is between $6 to $6.50 per share, from $10.20 to $11.20. This is, a huge change in just one quarter, in just 3 months. And they even cut their dividends from $6 to $1, I believe. And this is really bad for the company. It's been mismanaged for a very long time. But the crazy thing that happened is that all the other auto stocks like AutoZone, like O'Reilly's, like all these other Napa, which is genuine parts, all these other type of stocks actually fell with Advanced Auto Parts, because Advanced Auto Parts tried to blame it on the industry, blame it on supply chain, blame it on higher cost. But I believe this is only a problem within AAP, and it's not a problem that other auto parts companies are facing. And as I said, AAP has been mismanaged for a very long time. If you look at the 5-year performance between Advanced Auto Parts and AutoZone, Advanced Auto Parts is down 43% in the last 5 years, while AutoZone is up 265%. And it's the same thing with genuine parts, it's up 62%. I believe O'Reilly's is also up like 180, 190%. So this is not a problem with the industry, this is a problem within Advanced Auto Parts itself. They messed up the brands, they have bad customer service, they have bad reviews on their stores, and people just don't like going to Advanced Auto Parts anymore. They like going to AutoZone, they like going to O'Reilly's, and other places where they have more parts, more choices, and it's just better, run businesses. And Advanced Auto Parts, really messed it up. But there's a price for everything, which is why I'm willing to buy Advanced Auto Parts, even though it's a worse company at the right price. And we can really see it from the return on capital of those companies. Advanced Auto Parts return on capital is between 10 to 12%. AutoZone, which is in the same exact industry, its return on capitals are over 50%, up to 59% return on capital. And you can see the massive difference in the share price, which is why I believe this is not a problem in the industry, it's a problem within Advanced Auto Parts, by itself actually. And if we look at where those problems are actually occurring, one of the problems is the cost of sales. They claim it's some warehouse type of cost, supply chain cost. I just think it's being mismanaged. But another cost that a lot of these companies are facing is actually labor cost inflation. They're having to increase wages, maybe hire a little bit more people in many of their stores, and they depend on people in their stores to run them, which is why their SG&A actually went up from $1.3 billion to pretty close to $1.4 billion, which is around an $80 million actually increase. And this led to the operating income from being down from $200 million to only $89 million. This is a big difference. And I think this is something within Advanced Auto Parts, because AutoZone reported earnings 2 or 3 weeks ago. I believe it was at least 3 weeks ago, and it was nothing close to what Advanced Auto Parts reported, which is why I believe it's being mismanaged. It's very bad. Now, if you look at the balance sheet of the company, they have $226 million of cash, over $1.7 billion of long-term debt, which is a lot of debt. But I don't believe that that is actually a problem because most of it is due in 2027, 2030, and 2032. So by the time they get to the debt repayments, they will likely, have enough to meet those obligations. So I don't believe that that is a worry with Advance Auto Parts. The main worry is the management, and I believe they got a new CEO. I personally believe there's eventually going to be an activist that's going to join the company and turn it around because it's a pretty good company. I mean, in a pretty resilient industry. And in such times, you want to be in a resilient industry. I mean, you could look where AutoZone is trading at, and Advance Auto Parts is just making 52-week lows every other week, which is, being very mismanaged. And I think it has a lot of potential. But something with Advanced Auto Parts that I actually used for my valuation model, because it's very hard to value as the free cash flow is all over the place, their gross numbers are all over the place, their return on capital is very, very low for the industry, but they also cut their free cash flow outlook. Their free cash flow outlook last quarter was a minimum of $400 million for 2023. Now their outlook is between $200 million to $300 million, which is a 50% cut. I mean, I just can't believe these numbers on how fast things have changed in just 3 months, which is why we have to take the most conservative estimate if we want to buy Advanced Auto Parts. And the way I'm personally looking at Advanced Auto Parts, I'm not valuing it on a DCF or on my valuation model. I'm just trying to find a price where I would be very interested in actually even looking deeper at Advanced Auto Parts and even just owning the company. And for me, now the market cap is trading at around $4.3 billion. This is around a $73 price, $4.3 billion market cap. Now, as we looked in their free cash flow guidance, they have it between $200 million to $300 million. So the $200 million of free cash flow, for me personally, if I look at other options in the market in resilient industries that are not growing very much, I don't see anything trading above 10 times free cash flow. So I would not be willing to pay more than 10 times free cash flow for Advanced Auto Parts. This is just me comparing it to other resilient industries with also higher debt and, plenty of other things. Those industries are trading 6, 7, 8, 9 times free cash flow. So there's nothing above 10 times. I'm not willing to pay more than 10 times. So the 200 million, 10 times free cash flow is $2 billion. You divide it by the shares outstanding, you get $33 per share as a worst case scenario. Now, the best case scenario for me to even touch Advanced Auto Parts is they actually meet the higher end of their guidance, which is unlikely. It's $300 million, 10 times free cash flow is $3 billion, divided by the shares outstanding, this is $50 per share. So Advanced Auto Parts has to go to at least $50 or $40 per share for me to even consider touching it, consider doing a long-term valuation model on the company, which is very volatile. So as long as Advanced Auto Parts is above $50 per share, to me it's not a buy, and I would prefer to look into it much deeper if it ever gets to 40 or 45. Now, looking at this chart, it's very hard to make the case that Advanced Auto Parts is actually going lower because it's trading at the same level it traded at the COVID lows and at the same level it was trading at in 2012. So it's hard to make this case, but looking at these numbers, 200 to 300 million of free cash flow, I'm not willing to pay more than 10 times free cash flow. I believe we have to be conservative with this company, with all the mismanagement and the volatility. So for me, I'm not buying Advanced Auto Parts above 50 per share. My target is $50 to $40. This is when I could potentially do a longer term valuation model and then assess the company, much, much better. So I believe it's not a buy. I think AutoZone is a much better alternative, than Advanced Auto Parts. So thank you for watching the video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.